The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January. Only on India Today and Business Today.
Welcome viewers, you're watching Business Today Television. I'm Hour of Trade and we are brief pickup from the lowest point of the day. We had briefly slipped below the 25,650 mark, but from there we did have that pull up, but still we are sharply down in trade. 0.7% lower is what you see the Nifty at. The Nifty Bank is even weak when we talk about the comparison, because the Nifty Bank is now down nearly 0.7% lower at 59,267. It's the private sector banks that are coming under heavy pressure at this point in time, even the financial services names as well. Look at the real estate sector, 2.2% lower. That's the top laggard in trade among the sectors. Even the broader markets are now feeling the pain. Small cap 100 index, 1.7% lower. Autos, FMCG, pharma, you name it. All the sectors that are clearly crumbling under pressure. It's just the oil and gas names, the PSU banks, and slight gains in IT space that you can see among sectors where some buying is emerging. India VIX currently at 10 odd levels, 2.7% higher. So the volatility is also continuing to be on a higher end. On the Nifty, Asian Paints is topping the charts, 1.4% higher, defying gravity. ONGC, BL, HCLTech, Eternal, these are the stocks that are still holding up with some gains. But on the lower end, Adani Enterprises, Adani Ports, NTPC, Bajaj Auto, ICICI Bank, Jio Financial Services, these are the stocks that have slipped in trade at this point in time. Let's actually welcome our guest on board. Prashant Apse from Mehta Equities is now joining in to share with us his fresh take on the markets. Prashant, welcome. Good afternoon to you. Well, we were talking about earlier this week as to what kind of market trend can be witnessed, but throughout the course of this week, we've only seen more and more selling pressure. Negative news flows from across the world. It's of course the D-Day when the Supreme Court is going to be ruling out as far as the tariffs are concerned. We've already heard from Donald Trump how he's interested in imposing a 500% tariff on importing nations from Russia. And there are several other key concerns that are weighing on the sentiments. Look at where the Nifty has come to. Remember, in the start of this January month, we are not even in the first 15 days. It's not even first 10 days now. First and second trading sessions of January, we actually saw record high levels on the Nifty Bank, on the Nifty Auto Index, many other sectors as well. The Nifty hitting 26,300 and beyond, and we are nearly losing almost 1,000 points from those levels just within 1 week. How would you look at it?
I think good afternoon. Yes, hi Sakshi. In 1 week, Monday we saw all-time high again. The same week we are seeing so much of pressure. And we all know what went wrong with the global headlines. We are celebrating almost 1 year of Mr. Trump. Last year, January, Trump started doing this kind of headlines on tariff war. So I think that is still continuing to hit the Indian markets very hard. This week was too hard to believe. After hitting all-time high again, coming back to almost like 800 points down on the Nifty. So FIs also continue to so the same kind of pressure. The way they are doing in last 1 year. The last 1 week was again similar kind of pressure on the FIs. See, despite Indian markets having a domestic fundamental strong story intact, the global markets are not giving such kind of support for sustainability in the Indian markets. I think the trend will continue like this until unless there is a clear clarity on the unexpected things happening with respect to Trump's headline. So that should end. I think today evening we will get some kind of sense on the outcome of the hearing that will help some kind of Indian market. But again, no way we understand Mr. Trump what he's going to do on this weekend. So markets are very much in fear zone right now. I think the trend will continue to see the similar kind, and Nifty can test 25,400, 25,300 on the back of these kind of headlines.
Right. Prashant, I also wanted to ask you if there is any safe space in the markets right now where you can see maybe minimal impact of these external shocks. What are you advising clients to do? We've just now, mentioned to all our viewers that, it's the mutual fund data that still points to SIPs at record high levels, even if the equity mutual fund inflows have fallen in the month of December. That's because of the current volatility. What is it that you're advising investors to do right at the start when we are seeing the investor sentiment getting crushed?
In this scenario, I think one should go with the safe haven sectors like defense can be one sector which can be
Yeah.
considered to be very safe right now. We have seen that is a sector which is in positive. Sectors which are domestically driven, like FMCG can be again second sector one should focus more on. And IT can be a sector one should focus on after looking at the drastical fall in the valuations. I think that can be one sector to look on. So I think defense is one sector, railway can be second sector, even life insurance sectors can be one sector one should focus on with respect to having some kind of safe haven investing at this point of time. Even though if it doesn't focus on any sector, I think ETF sectors funds can be focused area to invest at this point of time.
Okay, got that. When we talk about the defense names, like you pointed out, how would you really be looking at the opportunities there? Is it a blanket buy? Is it very selective? Is it just the shipbuilders, or is it the likes of the big players like HLBL? How are you approaching the defense
I think one
space?
should have a portfolio kind of approach in the DLF, in the defense segment. I think HL can be one stock one should focus on because it's a exclusive monopoly in making these
Yeah.
helicopters. And so again, BDL can be second stock one should focus on. BEL can be third stock one should focus on. And one among the GRSC or Cochin Shipyard or Mazagon in the shipping building. So we need to have all kind of defense sector in one portfolio, one basket, and then focus on building that portfolio.
Let me also ask you on what was happening on the metals basket. We were talking about all through last couple of weeks that the metals are shining bright, and that's where the action is flowing into. Has that also looked at a stumbling block right now, or do you still believe that there is a lot of shine left there?
I think there is shine for the whole 1 year again going forward, but again the way it has performed from last 2 3 months, so that is giving some kind of benefits for a trader want to book some profits and all because that is there is the only way that index is giving such kind of great returns for the investors as well as traders. So there is a good profit booking attempt which is seen in the Nifty Metal Index.
Okay, that's as far as the metal index is concerned. But how would you look at what is happening with some of the sectors that are really losing a lot of ground? Small caps and mid caps are yet again feeling the pinch. What would you do with the broad market stocks right now?
I think that pain one has to continue because we have been keeping these portfolios in your portfolio from last 2 3 years. There has been an allocation mismatch in the client's portfolio. We were high in the mid cap and small cap, and we know what went wrong in the sector. Their growth is very muted. The EPS growth is very muted. Again, marginal growth is very muted. There is a earning miss in these two sectors, the mid cap and small caps. So until unless we don't get any clarity on the earning growth in a fundamental strong company, so this pain will continue to have in your portfolio.
Okay, fair point. So that's the broader market space for you viewers, that how you should be really looking at it. Let me also garner some views as far as the earnings season is concerned. Prashant, today we'll see Irida, tomorrow we have DMart, the rest of the next week we'll see numbers coming in from across the board in IT space. Then next weekend, Saturday, will be HDFC Bank and Reliance again. So I believe it's going to be also the domestic cues that will definitely be important to track even over the next week in the markets. Any specific sectors or stocks you're watching out for in terms of outperformance in Q3?
I think PSU banks should be the sector one should focus more. I think that will be delivering neutral to positive the way how the stock have been performing already. So I think the results are getting better and better because we have seen a lot of business updates from last 2 3 months, which says there is a good deposit growth, there is a good credit growth seen in the top 3 4 PSU banks at least. So I think that sector would be the first sector which will give some kind of positive sense in terms of going forward. But again, I think rest of the sectors will have a very mixed action. If you see DMart, I think there will be some kind of more focus on the EBITDA margins. But rest of the day, top line growth will be there. But we have seen EBITDA margins been under pressure from last 3 to 4 quarters. So it will have a continuous effect on DMart. So there will be mixed action in the same sector. We will have a good positive stocks and a bad positive stocks. So we need to focus very stock specifically this time.
Okay. Let me also ask you on the IT space specifically. IT names mid caps vis-a-vis large caps. Where would you still find some comfort? Today the index is up by 0.3%, trying to show that its strength. And at this point in time, when even there are some question marks left as far as how will the tariff things proceed. And of course, tonight is when the landmark ruling will come in from Supreme Court in the US. How would you approach IT?
I think mid-cap stocks looks good for me at this point of time. The way they have, there is a good correction which has happened with respect to business, with respect to economics, and also I think there can be a good stock. One should focus more on. The large cap has more negativity still left. I think the way they are giving their business updates, I'm not expecting any good numbers with respect to TCS, with respect to Infosys and all. For me, mid-cap stocks like Coforge or HCLTech or Tech Mahindra, these stocks looks good for me at this point of time. So Coforge is the best player in the mid-cap sector in the IT space.
And within the mid caps, what kind of names attract you at this point?
I think Coforge is the one stock which I am focusing more. The way that it has corrected in the recent times after announcing the big acquisitions recently. I think the valuation at this point of time at 1650, 1680 looks very good for me. I think downside is protected right now.
Okay, fair point. I think one other basket that I wanted to ask is today the oil and gas space is pulling up in trade. Of course, all of these external shocks began with US attack on Venezuela and how the oil narrative is likely to change, how the oil power play is going to shift after all of this. The key point here is, should one be really betting big on the oil and gas space, maybe the upstream majors, the likes of Reliance Industries or ONGC, Oil India, or should one be looking at, the OMCs, IOC, HPCL, BPCL, keeping the fact in mind that most experts on oil do suggest that even if the US starts to controlling the narrative on oil, they are likely to keep the lid or the cap on how the prices will move in future. That will be good in a way for countries like us. But what happens to these oil and gas names? How should one be playing that?
In the very short period of time on the volatility of the crude, I think playing upstream stocks like ONGC and oil would be a best play right now, and as a trader perspective. But when we see the oil and gas marketing companies like BPCL, HPCL, there is some kind of concern where there may be some kind of rate cut announcement by the government any time, so that will bring a lot of pressure in the profitability of the OMC companies. So I think best play would be Oil India. Second would be again ONGC. Reliance has its own issues again. The way there was some headlines in the Bloomberg 3-4 days back with respect to vessels traveling from Russia to India. So that made a lot of pressure on the stock. So such kind of news can be avoided by the investors or the traders right now. I think there will be a lot of pressure seen in the Reliance industry going forward. So ONGC, Oil India looks very good for me at this point of time. If the prices remains cool down, at least I read a report which says Mr. Trump want to keep it very much near $50. So if that is true, so then again OMC can be a good trade as a trading opportunity. But again, I would like to have a positive view on Oil India only.
Fair point. Let's shift focus, viewers, on upcoming budget now. That's going to be another big trigger that the stock markets will be watching out for. In 20 days from now, we are going to be seeing the budget getting presented. The air is about to get cleared completely today. Hopefully that it will be probably the one of the rarest times when we will see budget being presented on 1st of February. That will be a Sunday as well. And the big question is what's going to be on the focus of the government this time around. Seems like India's mining sector could be looking for a major push in budget 2026 with the new incentives that could be coming in and schemes in the pipeline as well. And my colleague Aishwarya Patil is now joining me in the studio to help us with exclusive details she's got on what could it really mean for coal, rare minerals, private players. So Aishwarya, what do we expect mining sector this time around on top of the radar, especially what has happened in 2025 and how the entire rare earth minerals episode has played out in China and what has the government really realized there?
Well, we'll bring you more details on the mining sector as well. That's expected also very, very soon. But first, I'd like to point out towards the coal sector. Ministry of Coal, of course, has proposed for a 35,000 crore rupees incentive package for coal gasification. Now, this is, of course, a step up from what was announced in 2026, allocation of 8,500 crore. So, this is what we are learning from our sources, that the coal gasification incentives could be quadrupled in 2026 ahead of the budget season. So it will be a big booster for some of the coal majors, both PSUs as well as private players, Coal India, BHEL, GAIL, NTPC, NLC, SAIL. All of these major players in the industry will get a big financial booster with this 35,000 crore rupees that has been proposed by the coal ministry. Of course, this is a strategic necessity for all of these players because there is a low carbon transition goal that India has set for 2030, about some million tons of that is the goal that India has set as far as the coal gasification is concerned, 100 million tons or so. That's the figure that we are looking at. Of course, economic impact, we could also pull down on our import bills that amounts to about $50 billion if we do transition to coal gasification. So big news coming in there for some of these coal players with this 35,000 crore scheme. Objective, of course, 100 million tons gasification target by 2030. Back to you.
All right, Aishwarya, thanks a lot for all of those details. So looks like it could be the coal sector, the mining sector that could be looking for a major push this budget. Prashant, how are you looking at all of these news flows there? What we are learning from Aishwarya and her sources is that mining sector might be receiving 50,000 crore rupees of financial boosters. The coal gasification is expected to get about 35,000 crore rupees incentives as well. Newer schemes are likely to be announced there, and the government has already announced the 8,500 crore rupees incentive for the NMCC scheme in 2024, and on top of that there could be further changes that we could be seeing. How would you look at all of this?
I think yes, government will be focusing more on the PLA schemes for a lot of manufacturing or mining or other resource focused sectors. I think government has to do something which they would like to more focus on the resource development in India, because we should not be dependable, and they will focus more on the Atmanirbhar kind of stories going forward. I think yes, Aishwarya pointed it very much right. I think Coal India can be a better candidate in this point of time. But again, one should focus more on the capex as well as infrastructure focus. So the government will be focusing more on a capex model, which will bring a lot of consumption boost story in India with respect to rising income taxes again from 12 lakhs to 14-15 lakhs again, because that will bring a lot of consumption story. Will bring in a lot of growth in the Indian market. So all sectors will be focused more on the PLI schemes. I think government will focus more on the domestic driven economic rather than giving importance to the global market, because we know how global markets have reacted from last 1 year.
Since we are talking about Coal India, we have to also talk about Bharat Coking Coal, the IPO that's open today. It's already got 5 times subscription, and the anticipation was already too high before the IPO came in. The first IPO, main board IPO of 2026, the first PSU IPO that we've seen, first subsidiary of Coal India also coming up with the IPO. A lot of firsts and new trends there. The price band has been extremely attractive, and that's probably also led to a lot of investors really betting big on this one. What's your sense here on BCCL? What are you advising clients? It's going to be a tough fight for them to get this allocation, even if the grey market premium is indicating about a 40-45% listing gain.
It's very positive. I think the way the sector is growing with respect to the demand for coal, coking coal, the way that it is supporting for the growth of the steel sector also. Considering the market share of 58 to 60% of coking coal, plus again supported by a strong parent like Coal India, plus the valuation matrix around 8p and 1.5 price to book valuation. But one concern is from last 3 years, the numbers are similar to what they are showing this year. Again, the top line has very much grown very flat. Margins have been very volatile because of a lot of huge rains. The coking coal manufacturing mines have been stopped 2 times. So there is a risk in this company as well. But again, considering the outlook going forward, the management outlook, which says from the current capacity of manufacturing 39 million metric ton, they are focusing on 49 to 50 million metric ton going forward for next 2 to 5 years. I think if that becomes very true, I think this pricing looks very attractive for a long-term investors. But we have a outlook on listing gain candidate. I think if the grey market really pictures in the listing day, I think with 40-50% listing day gain, one should try to exit the stock.
Okay, got that. So I hope this is also giving you some understanding, viewers, as to how to be looking at these new opportunities in the IPO space as well. If I have to ask you, Prashant, what is that one space that you would not want to touch at this point in time, especially looking at the volatile moves that we are seeing in the markets? What would that space be that you want to stay clear of?
I think too difficult to say this at this point of time, but again, tough. Everything has some kind of comfort levels right now. I think some sectors are giving a lot of comfort with respect to valuations. So I think high PE valuations would be any sector, any high PE valuation stock should be avoided at this point of time.
Okay, high PE valuation stocks is something that you should be definitely be waried of at this point in time. Let me also ask you on specific the new age tech stocks. They have been garnering attention. There have been a lot of news flows, mergers that we've been seeing there. QSR space, we've seen Jubilant Food come out with the report as well. So a lot of focus is coming back to the new age tech stocks, the QSR space as well. What's your sense? How will they perform in 2026?
I think they went into bad space from last 2 years. I think the sector did not do very well in terms of performing price action as well as on the P&L accounts. I think that will continue to do similar way for 6 months to 1 year again, because lot of huge competition, unbranded QSR products have been coming into market. So I think that is beating a lot of things on the QSR segment. But again, with respect to other new age companies like Lenskart, I have been talking on this channel many times. So I think very unique stocks which should be focused more on the Lenskart as well as Zomato would be again on stock one should focus on. Swiggy can also be an opportunity because of the recent crash in the price. So that can be considered. So there are very few new age companies which are giving some kind of very optimistic outlook for long term. But again, QSR is a avoid for me in the list.
Okay, fair point. Let me also, last 6 minutes to go before the market shut shop for the day. Let me also just get your understanding on the banking space, particularly the large private sector banks, especially what has happened with HDFC Bank over the last couple of sessions. We've seen some weakness pour in. How are you looking at the large private sector banks that were the comfort zone for a large part of 2025 in investors' portfolios?
I think I should go positive on this because the reason of sell-off would be, I think FIs are trying to beat the stock which has more liquidity. The way FIs have sold from last 5-6 days, I think they are pushing the large cap stocks which are easily getting sold in the market. I think that is the only reason why HDFC, ICICI, Axis Bank, Kotak Bank under pressure. But overall, I think the growth factor remains very positive for me for a private banking sector. But my focus more would be on the PSU. I am more positive on Canara Bank, Bank of Baroda as well as SBI. But at this valuations, I think HDFC looks very attractive for me. ICICI again, I think last 5-6 days it has rallied well. So there can be more profit booking seen in ICICI. Axis and Kotak in these two stocks, I think Kotak can be a better stock for me in the private space. HDFC, Kotak, these two can be best at this point of time.
Okay, let me also just focus on a few stocks. I think Manappuram Finance is the one that's catching our attention now. It's in fact fallen in trade by almost 10% right now. It's also among the top laggards in the F&O space today. The reason why Manappuram Finance, it's picked up also from that sharp low, 6% down right now. That's the reason is some of the reports from Reuters have indicated that Reserve Bank of India has raised objections to Bain Capital's plan to acquire a controlling stake in Manappuram Finance, as the US firm has a controlling interest in another Indian lender, and this is what Reuters has really mentioned, and therefore you do see that sharp fall coming into Manappuram Finance. Any view on these gold financiers, Manappuram, Muthoot, and especially on Manappuram after this news flow?
I think the news flow has already impacted the price very hard. So I think they will continue to see some kind of pressure in the prices. But again, the deal will go. I think there will be some more justification from the Manappuram company as well as Bain Capital, which is going to acquire this company. So I think that will take its own time to justification. But again, overall, gold financing companies looks good for me at this point of time. I think Q3 numbers will be better than Q2. So that is the reason why these stocks have already done very well. And we have to wait and watch for Q3 earnings.
Okay, got that. So that's Manappuram Finance for you right now, down by 6.2% at 290 odd levels that can be seen some severely under pressure. We were talking about HDFC Bank, viewers. My research team has told me that this is in fact the worst week since January of 2024 for HDFC Bank. It's already lost 1 lakh crore rupees in market cap this week. So keep an eye out on HDFC Bank there, and we will continue to focus on that as well. Let me also look at some of the other movers. On the positive end, how are you looking at Asian Paints? 1.6% higher at 2,833. Do you believe 2026 could be a year when Asian Paints could make a sharp comeback after 1.5 years of underperformance?
No, I think there's a very limited upside in both the paint industry as well as in the Asian Paints. The way how competition has risen from other good players like Jindal, Birla taking a lot of market share, I think industry will grow, but Asian Paints will have a very limited upside. I think 3,000, 3,100 can be a level for the whole 1 year for Asian Paints. Again, volatility of the crude prices, volatility of the competition, that will keep Asian Paint under pressure only. So I'm not expecting anything big in happening for Asian Paints in 2026.
Okay, and lastly, Prashant, help us understand, what do you anticipate for the next week? How are the markets going to pan out next week? This week already, Sensex has lost about 2,200 points. Nifty is down by 2.5% as well. So it's a sharp fall in the first entire week of January as it has panned out for this year 2026. What do you think will happen in the next week in the markets?
I think we have already discounted a lot of bad news which are going to happen today night at 6:30, 8:30, as well as more headlines from the Trump in the weekend. So downside is very limited. I think we have to wait and watch for the evening session. But again, we have only 2 minutes for taking a trade. So I will take a trade with 100 rupees stop loss in the Nifty at this point of time and go positive on the next week. So I think once the weekend goes off, a lot of clarity will come into the picture.
Okay, fair point. Prashant, thank you so much then for being with us on the program and helping us and our viewers really identify where are the problem areas and where do you still find good attractive valuations where you can still dip your feet even in this volatile market. But time to wind up the session, about 1 minute, 1.5 minutes to go before we shut shop for the day. We did slip below 25,650 for a brief moment, but we are on course to again inch towards 25,700. We are still down by about 180 odd points as far as the Nifty is concerned. We were tempted a mild recovery from the low point of the day is what we are given to understand. But clearly for this day we have only the oil and gas, IT and the PSU banks that have managed to pull up into the green. But real estate, autos, media, private banks have all slipped into the red. Small cap index, one of the worst performers, 1.7% lower, definitely underperforming with a huge margin from the Nifty Bank. Even the Nifty mid cap is down by 0.8%, but it's the small caps that clearly are under pressure. Capital markets index down by 1.8%. Capital goods index also down sharply, 1.1% in trade. Look at financials, FMCG. Everywhere you do see a lot of pain that's emerging in the markets. At this point, Asian Paints, ONGC, HCLTech, Dr. Reddy's, Bharat Electronics remain as the movers where we see on the positive end despite the weakness that we've seen in the markets. But Adani Group stocks, HDFC Bank, ICICI Bank, NTPC, Jio Financial Services, these are some of the names that have definitely dragged under some pressure at this point in time as well. So that's how the markets have shut shop, viewers. Just managed to close above that 25,704 mark. But remember, tonight is going to be an important one where the announcement on US tariffs from the Supreme Court and its verdict will have an impact on how the US markets close for the week. And of course, what kind of cues do we get for Monday as well? Then that will be extremely important for us to track. With that, we wrap up on this special edition. Stay tuned with us on to Business Today Television. Even beyond the market hours, the coverage continues on your screens. And hope you have a fantastic weekend ahead.
The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January. Only on India Today and Business Today.